Dan Ives is here, star analyst of Wedbush. I mentioned at the top of the program that you moved a couple of really beaten down names into your AI 20, that being Salesforce and ServiceNow. What do you make of what Jensen said amidst all of this skepticism about that space?
I think the hearts and lungs of the AI revolution will be in software. Now, look, right now it's data center build out, GPUs. I mean, you're still in the early days of this, what's going to be a 10-year build out. But software is going to be key to the use cases. I mean, it goes to our point. If you look at Palantir, and ultimately followed by Snowflake and Mongo, in my opinion, to say Salesforce and ServiceNow are structurally broken companies, to me, look, in my career, I think it's the most disconnected call that I've ever seen. Investors thinking that software is not going to play a huge part of the AI revolution.
It will. That's not to say that certain ones aren't being disintermediated in a extraordinarily large way, or there's a belief, if they're not today, that they will be tomorrow, right? As Brad Gerstner was telling me, you're not selling these stocks because you are so upset with what's happening today, but you now more than ever need to see some justification for the multiples that these stocks have commanded. Let's take that. What's the PE of Salesforce and ServiceNow? Can we show that? There it is. So, okay, Salesforce is down to 15. The forward on service is almost 25. Is that justified? Well,
it's my view that like the monetization, because like when I look at the revenue for a ServiceNow or Salesforce, I could argue there's 20, 30% incremental revenue from where they are today. We're talking, ultimately tens of billions of dollars, when it comes to Salesforce, that are not factored in to the valuation, because I get in the near term it's a headwind. Benioff, I think, would be the first one to admit it. But to say that Salesforce and ServiceNow, given how integrated they are in enterprises, in the stack, you look at the hundreds of thousands of customers, as these use cases play, you haven't seen it today, but in the next 6, 9, 12, 18 months, I think what Jensen talked about is exactly right. You cannot paint all of them with the same brush. You can't just say an SMB pure play they're going to be impacted as much as a Salesforce, an Adobe, a Workday.
I mean, not everything has traded miserably, but obviously so many have. I mean, when you look at all these companies, how do you know what justifies a higher multiple versus ones that don't? We showed a pretty good discrepancy in the forward PEs of both of these names, which have equally gotten hammered. Can you look at a Salesforce and say, okay, at 15 times earnings, that stock has corrected enough that it looks attractive, but just because you can make that case for one doesn't necessarily mean you can make it for the other, but you are.
Because I view it as, Salesforce is the one, if there's one name that's been so dislocated relative to what I believe the opportunity would be, it's Salesforce. And I could also argue some of the cybersecurity names like Palo Alto and CrowdStrike. When I look at ServiceNow, betting against McDermott has been the wrong move. If you look at that install base, now I could say they were early on in terms of AI, and now they're really sort of being viewed as they're going to be disintermediated. But Scott, like I've talked to 40, 50 CTOs, CSOs, IT managers over the last week to make sure, the stress has to make sure that I'm not looking at it wrong, and I feel further conviction in this
but can you just those? That's like asking people on the football team, hey, how's the team? Everybody's like, hey, we're great. Everything's great. Can you trust that you're getting the best opinions on what's really happening by asking the people who are at the companies where their stocks are declining? Aren't they all trying to?
I'm talking about the buyers. I mean, the buyers of Salesforce, the buyers of ServiceNow, the buyers of cybersecurity. And I feel I come away viewing this as, I'd say it's a generational type of opportunity in terms of what's happening in software.
Okay. Let me ask you this. Microsoft got downgraded today by Melius, which says, quote, Satya lost the AI narrative. I know you're going to counter that, but doesn't the stock kind of worry that Melius is right?
Yeah, and Ben, an analyst, who I have huge respect for.
Is there a but?
The AI revolution is not going to be successful unless Microsoft's successful because of how integrated they are in enterprises, in Azure, in the backyard of, ultimately really the core enterprises movement to AI. Have they hit some sort of perception soft spot here relative to Azure, relative to CapEx in terms of that not all being allocated to Azure? Yeah. But I think this is one where, when I look at Microsoft, I think it's a stock that has a 5 in front of it and a 6 in front of it over the next 12, 18, 24 months. I just think near term, right now, it's a guilty till proven innocent.
Well, I mean, how do they prove themselves to be innocent? Melius suggests today that they need to increase their CapEx markedly. That's the word that they use, not me, to keep pace with what Google and Amazon are doing. So their free cash flow, at least in the near term, is going to take a big hit. Isn't the market, aren't investors going to have a problem with that?
I think investors clearly, you've seen that since the quarter, right, in terms of the sell-off. My view is that when it comes to Microsoft, they're not going to have to increase CapEx maybe to the level that they're talking about, as well as also when it comes to the enterprise, the monetization, they've only monetized 5% of their enterprise customers. That's why I'll bet on the Della and Redmond to navigate this. Look, right now, it's there's obviously very negative sentiment, and I get the call.